So what is up YouTube? In today's video we're going to be talking about Virgin Galactic, ticker symbol SPCE, and obviously they recently did hit a huge milestone which we will be talking about, and we're also going to be talking about why the stock tanked after this huge news. So 1 month ago Virgin Galactic did have a test flight, and this was with just the pilots and where the spaceship went into suborbital space, and it was successful. Now since then, a few weeks ago, Virgin Galactic did get FAA approval, and from this news the stock went up over 40%. Now, FAA approval basically means that Virgin Galactic can now take consumers or customers to suborbital space, so they could actually start commercializing spaceflight. Now, during this period of the first test flight and then them getting FAA approval, the stock basically went from $20 to the high 50s. Now, a few days ago, there was actually another huge milestone Virgin Galactic actually made, and you guys all probably heard of this, but their owner Richard Branson and the whole crew actually went to suborbital space, and this was a huge success. Now, this is a huge step forward, and this is actually a historical moment, as the next step from here is actually commercializing spaceflight and taking regular people to suborbital space. But even after this event, the stock dropped substantially, and now it's trading at $36 per share. Now, there are a few reasons for this drop. Now, the first reason I would say is this was a buy the rumor, sell the news type situation. So when Virgin Galactic first got FAA approval, the stock shot up over 40%, and this is because investors started anticipating that Richard Branson, who's the owner of Virgin Galactic, would go to suborbital space. Now, this is exactly what happened. However, there was no move on the stock after this event happened, so investors just started to sell. Now, another reason why the stock dropped is because Virgin Galactic actually filed to sell $500 million in stock to raise money. Now, the reason it dropped is because essentially after this filing and after they do sell these $500 million worth of shares, shareholders own less of Virgin Galactic, so it is dilutive. Now, it does make sense why Virgin Galactic did make the decision to dilute shareholders right after its space flight. It's because now Virgin Galactic can essentially raise $500 million without giving that much of the company. For instance, if this stock was $10 per share and its market cap was a lot less, $500 million would mean they're giving up a lot of their company. But now that the company is worth close to $10 billion, or was worth close to $10 billion, $500 million wasn't that big, so it made it a lot easier and a lot less risky to raise this money. Now, anyways, Virgin Galactic would have eventually needed to raise money. This is a company that has close to $600 million in cash, but is not profitable and is burning cash, right? They had hit years where they burned $300 million, $200 million, and they're projected to continue burning close to $200 to $300 million, if not more, over the next few years. So eventually they would run out of cash, so it does make sense why they decided to raise cash now. So now their cash position after they do sell their shares will be close to $1.1 billion. Now, essentially, if they didn't file to sell more shares, the stock probably would have went higher. But what you have to understand is this company would have eventually raised money, and this was a great opportunity for the company to raise money because there was a lot of demand for the shares because of the huge event they held. Now, this event is actually very big for the company, and if you just look at the views they got on YouTube, it's over 10 million. So people all around the world now know what Virgin Galactic is doing, and so now there might be more interest into the company and more people might start booking tickets. Now, these tickets aren't cheap. They're actually $250,000. However, most of the tickets are sold out over the next few months, and they actually launched something called One Small Step, which is where you pay $1,000, and this is basically a reservation to buy a ticket, but these were also sold out. So now there's a lot of demand for tickets. So the company actually had $80 million in sales and deposits for these tickets before this event actually happened. Now, after this event, there's probably a lot more demand, so that might have went up a lot higher, and they're probably going to start fulfilling these orders starting from next year. Now let's talk about whether this stock is a buy or not. So when considering whether Virgin Galactic stock is a buy or not, you have to consider a few things. The first is whether you think the space tourism industry will actually develop like predicted. The second is whether you think Virgin Galactic will actually be a dominant player in this space. Third is whether you think Virgin Galactic tech can be used in other forms of travel. And fourth is when you look at the valuation, do you think it's truly worth it? Now, this space tourism market is expected to become a $3 billion market by 2030. Now, whether this will happen or not is unknown, but I do think it will happen because it does look like there's a lot of demand for tickets. Now, whether they'll be the major player in the space tourism, it really depends, right? Right now, there are three major players, which is SpaceX, Blue Origin, and Virgin Galactic. Now, SpaceX isn't really planning to enter space tourism anytime soon, so it's probably just Blue Origin and Virgin Galactic. And for other companies to join this race, they're going to have to spend a lot of money because this is an extremely capital intensive business or industry, and also it's going to take a long time to develop these technologies. For example, it took Virgin Galactic almost 17 years to come to the place it is now. So I think it is safe to say that Virgin Galactic will either be the number 1 or number 2 player in this space. So essentially, I think they might have 50% market share by 2030, which means $1.5 billion in revenue. Now, whether they get more revenue than that really depends, because their technology can be used in other aviation forms of travel. However, right now we really don't have much information on how else it could be used, and really I think we'll have a better idea maybe in the next few years, but right now I can't really say much. So basically, they're gonna have revenues of close to $1.5 billion by 2030, and their current market cap is $9 billion. So essentially, we're paying 6 times of 2030 revenues currently. Now, this is high, but it isn't terrible, because this is a space tourism company and it is in a developing industry, and it'll still continue to grow after 2030 if it is successful. So its price to sales multiples will be higher, and it might even be 12 or 15. So you could definitely get a return if this company is successful in space tourism. However, I think it is still highly speculative, which is why I'm not buying it yet. I made a full stock analysis on this company, and I will leave that in the comments down below. And this was just a quick update on Virgin Galactic stock. And if you did enjoy the video, please do leave a like and subscribe. Also comment down below what videos you'd like to see, and thank you for watching.